Welcome to Matters Financial, Geopolitical from the Frontier. Thanks for stopping by. If you're just interested in events in the Kenyan banking sector, then jump towards the end of the podcast and you'll find that there. Let me first put up a view of Nairobi that I took on Friday afternoon from the Al Jazeera Bureau, which is in Upper Hill. And there's this enormous building on the Nairobi skyline. It's the UAP Old Mutual building, and it sort of dwarfs everything else, as you can probably see. I was at Al Jazeera for an inside story about Djibouti's elections and what they would mean for stability. Country, fewer than 1 million people, very limited natural resources. Djibouti is courted by all the world powers, the reason being its geographical position at the Bab el Mandeb, which is the Gate of Tears, a strategic location at the entrance to the Red Sea and south of the Suez. Incumbent President Ismail Omar Guelleh has been in power for 17 years, but the opposition accuses him of not doing enough to deal with the country's high unemployment. According to the World Bank, 20% of the population lives in poverty. Not everyone has been enthusiastic about the vote. Claims of repression. Sami Zaidan was the presenter. Hamidou Woni was one guest. Thomas John Guinard was the other, and I was the third. And the point I was making was that it's at the epicenter of 21st century geopolitics. That's one big point. It's not a preeminent example of trickle-down economics. 70% of GDP is from the port, and they really are providing port access to Ethiopia and are leveraging that. Put up a photograph of President Guelleh and also mentioned that he was re-elected with a landslide win. Another one of those results which you could have predicted beforehand. Macro thoughts. The yen heads for its longest winning streak since 2012. And you know I was bullish the yen from the beginning of the year. Beijing risks ERM-style currency crisis as deflation persists. A top advisor to the Chinese government has warned that Beijing risks a currency blow-up akin to Britain's traumatic ordeal in 1992, which I remember vividly. If it continues trying to defend its exchange rate peg and a deepening deflation crisis, this is Yu Hongding, director of the Chinese Academy of Social Sciences. China is caught in two concurrent deflationary spirals that are feeding on the other. They must stop intervening on the exchange market. China needs to devalue by 15%. They are creating conditions for speculators, he told the Telegraph. He warned that the slowdown in capital outflows in March may prove fleeting. Reserves will continue to fall until we devalue. Once we get towards $2 trillion, the markets will start to panic. They won't believe that the government can control it any longer. And that's what I said. I wrote a piece a while back talking about when the market suspends its disbelief. It's a very dangerous moment. I like this tweet. Real love lasts forever. A 6,000-year-old kiss discovered on an excavation site in Iran in 1972. You find magic wherever you look. Sit back and relax. All you need is a book. That's Dr. Seuss, The Cat in the Hat. And this mess is so big and so deep and so tall, we cannot pick it up. There is no way at all. Cat in the Hat. I went back to Cat in the Hat because of the man in the hat. Belgium said Mohamed Abrini, dubbed the man in the hat from security videos, has confessed to being the third member of the terrorist squad that struck Brussels airport on March the 22nd. After shepherding two suicide bombers toward the check-in counters, the so-called man in the hat planted a bomb that failed to detonate immediately. left the scene according to prosecutors. Surveillance cameras spotted him on a 10-kilometre stroll towards central Brussels before the trail went dark near the European Union headquarters. Brini dumped his light-coloured jacket in a garbage bin and later sold the hat, according to the prosecutor's statement. Returning to the Panama Papers, The Independent says the fact that so few Americans have been linked to the Panama Papers could suggest that their details were deleted from the documents given to Süddeutsche Zeitung. And this is the point I made a few days back when I said the absence of any US individuals denudes the Panama Papers' bona fides. And then I like this question that was posed in an article on Global Research: why Iceland? I'm going to read it if you fancy. Kerry is in Japan for a G7 meeting which is focusing on global security threats, and he became the first US Secretary of State to pay his respects at Hiroshima's memorial to victims of the 1945 US nuclear attack. A photograph of Hiroshima. So there's one of those big-scale events, the likes of which are extremely rare, we hope. Currency markets: Euro 114.05, key level is obviously 114.52. Dollar index 94.11, Japanese yen 107.82, Swissy 0.9523, pound 141.13. The Aussie is at 0.7538. Indian rupee 66.345, South Korean won 11.4623, Real 359, Egyptian pound 8.86, but of course it's a black market rate for the pound, and the South African rand is around the 14.9299 level. That sell instruction I gave was at 14.73, if you recall. Dollar yen, I'll put up a 1-year chart. 107.82, target 105, then 95. On the 11th of January, I said one of my conviction trades for 2016 is to buy the yen against just about everything. And it closed at 117.30 a little while back, and I said I think you can get to 105 and then even 95 this year. Dollar index, I'll put up a 1-year chart. We're just around the 94 level, 93 is the key level. Euro dollar, we tested 114.50 just very briefly last week. We're probably going to test it again. Commodity markets: gold, that suddenly popped higher and above 12.50, which was the pivot price I was speaking about. I'll put up a 1-year chart for you to take a look at. OPEC's days as economic force are over, really, asked Olga Scheipitz. And you can see that they've kept their production levels high, but have forced American shale producers to capitulate. Crude oil, I'll put up a 1-year chart, rather toppy in my view at these levels. Sub-Saharan Africa, the world looks away as blood flows in Burundi. More than 250,000 people have fled in terror as opposition militias plot their return. Without international assistance, a humanitarian disaster looms. Blood flows everywhere in Burundi. That's how things are, said the young farmer, rolling up his trouser legs and a shirt sleeve to show cuts and bruises almost as raw as his anguish. And that continues. The trajectory of Burundi continues to go in the wrong direction. After 25 years in power, Chadian President Idriss Deby is seeking a 5th term in office at elections on Sunday. He's regarded as an important player in the struggle to defeat the Nigerian Islamist militant group Boko Haram. The French military in Mali value him highly. Welcomed to the White House by President Obama, chair of the African Union. And I concluded by saying this is another election whose chronicle was foretold. The Panama Papers' growing impact on Africa. This is Deutsche Welle, citing the twin sister of Joseph Kabila, nephew of South Africa's President Jacob Zuma. Business people allegedly linked to President Mugabe are all named in this Mossack Fonseca leak, the biggest data leak ever. While the practice of keeping money abroad is not illegal, the revelations by the International Consortium of Investigative Journalists team, about 400 journalists, have made global headlines. I like this sentence: at 2 p.m. in the tiny African state of Djibouti, everything stops. As the sun burns high in the sky, people retreat to their homes, save for a few men lying in the shade of colonial-era walkways, chewing cat leaves that bring on a hazy high. Having run the ANC's intelligence operation when it was in exile, Mr. Zuma knows which of his colleagues' closets are filled with skeletons, so MPs fear him. Even so, as his popularity with voters withers, his grip over the party is slipping. The Constitutional Court verdict was a reminder that even presidents are supposed to obey the law. The ANC, by sticking with a leader who appears not to believe this, is making a mockery of the democracy that it and others fought so hard to establish. Zapiro, who's a cartoonist, put out this tweet: "The dead president walking." Pretty gruesome. South African all shares up 1.44% this year. Dollar Rand, I'll put up a 1-year chart. Might strengthen a little bit more, but I still think there's a sell below 15. Custodian of the holy mosques, the King Salman, honours a banquet held by President al-Sisi at Abdeen Palace. Quite grand. Egyptian EGX30 is up 5.68% year to date. Buhari is set to confer with Xi Jinping on support for development of Nigeria's infrastructure. According to the FT, Nigeria is eyeing China's panda bond market. The opportunity now, with the renminbi being a reserve currency, we're looking obviously at the lowest cost of funds to fund our budget deficit. Initially, we were simply looking at the Eurobond, but then when we began to explore opportunities in the renminbi market, so there is a possibility of issuing a panda bond. Also put up a photograph of President Buhari, VP Osinbajo, and Minister of Budget and National Planning. Nigerian all share down 11.57% so far this year. Ghana Stock Exchange Composite Index down 4.46% this year. Interesting piece by Kevin Watkins of the Overseas Development Institute, talking about Africa's great opportunity for reform. First, the bad news: after 15 years in the global economic growth fast lane, sub-Saharan Africa is reeling from the effects of falling commodity prices, depressed Chinese demand, deteriorating financial conditions. IMF has revised growth forecast down to 3.5% for 2016 from an annual average rate in excess of 5% since 2000. Saying that the good news is that Africa's economic slowdown is a wake-up call and an opportunity to rethink an economic model that is failing. The impressive growth record of the past 15 years has roughly doubled output, but with limited results for poverty reduction, job creation and productivity. Extreme inequalities rising in many countries. Manufacturing has stagnated. Saying that the challenge for policymakers is to set a course for recovery that supports more inclusive growth while preparing the ground for an economic transformation. I think meeting that challenge in the midst of an economic downturn will not be easy. Having ridden the wave of the commodity supercycle, Africa has been hit hard by the slump in oil and metal prices. Dependent on oil for 70% of government revenue, Nigeria being forced to turn to the World Bank and the African Development Bank for an emergency loan. Eurobond markets that 2 years ago looked like a source of cheap money are delivering their own verdict. Combination of currency devaluation, shrinking FX buffers, and slower growth has pushed typical yields on African bonds from 3 to 4% 2 years ago to 8 to 9% today. And then saying the region's competitive position has deteriorated relative to emerging markets like Vietnam and Bangladesh. Adjusted for productivity, real wages are higher, especially for skilled labour. Saying that the quality of education is also abysmal. In Vietnam, sustained growth has been underpinned by the development of an education system that is producing learning outcomes to rival those in the UK. Tanzania is seeking to achieve universal secondary schooling, but after 5 years of schooling, fewer than half of the country's children can pass a grade 2 numeracy test. The case is not untypical. Coming to Kenya, the Central Bank of Kenya announced last night that they've introduced a liquidity support framework for banks. They said in a press release, the Central Bank of Kenya is concerned about the anxiety that continued in the financial sector at the end of last week. This follows the placement of Chase Bank Limited under receivership on the 7th of April 2016 due to its inability to meet its financial obligations. The Central Bank is confident about the strength of the banking sector. We wish to reinforce our support to the sector. Consequently, from tomorrow, which is now today, we will avail a facility to any commercial or microfinance bank that comes under liquidity pressures arising from, this is key, from no fault of its own. We will avail this facility for as long as is necessary to return stability and confidence to the Kenyan financial sector. Central Bank of Kenya. The FT said Kenya steps up support for banks. Chase is, of course, the third bank to be placed into receivership since Patrick Njoroge became central bank governor last June. Told a hastily called press conference on Sunday evening that while he was confident about banking sector stability, he recognized the fear and anxiety out there. From Monday, we will avail a facility to any bank or microfinance institution that comes under liquidity pressures for no fault of their own. I'm sure depositors, once they know that this support can be provided to their institutions, they will be calm. Calm will be restored. He said no upper limit would apply to the facility. Over the past few months, a flight to quality has been noticeable as depositors move their funds away from the smaller of Kenya's 42 banks. Largest 7 institutions control some 80% of the market. He warned that some institutions might feel some heat from his tight regulatory regime. And he issued a thinly veiled warning when he said banks should consider 2016 as a transitional year. The idea is that banks will strengthen their business models to be more resilient, so they will be more stable, he told a press conference. No one is an island, and so some of the banks might feel some heat from this tighter supervision. This will inevitably require some consolidation. That means some banks need to look for strategic investors. Habil Olaka said the immediate pressure is starting to subside, but agreed that things are becoming much tougher. That is apparent. RenCap said, of course they need some consolidation. There are just too many banks. There's a whole lot of cleaning up going on, and I think there will be more, but it should result in a stronger banking sector eventually. I said that I thought Njoroge and Rotich were trying to make consolidation an orderly process. However, I also warn that sometimes you can't control such a situation. Trying to hold back market forces is like standing in the way of a freight train, I said. Bob said it's about bloody time. We have so much opacity in this economy that the poor guy who's trying to run a small business hasn't had a hope in hell's chance. Over the weekend I wrote this. On Thursday, the decision was made at 4 a.m. in the morning. The central bank placed Chase Bank into receivership. Chase Bank on Wednesday published results in the Standard newspaper showing that its earnings dropped from a profit of 2.3 billion shillings in 2014 to a loss of 742 million in 2015. Loans to employees and directors in 2016 amounted to 13.6 billion shillings versus the 3.24 billion shillings reported the previous time. That 13.6 billion shilling figure was about 50% more than the core capital of the bank. Chase Bank's non-performing loans jumped from 3 billion to 11 billion in 2015. Evidently, it is impossible to get a 360-degree perspective because the situation remains really fluid. Deloitte Kenya qualified the accounts. This qualification was miniaturized in Standard newspaper earnings restatement and release. A qualification of the accounts is no small thing, and the act of miniaturizing that qualification is hardly helpful either. The chairman Zafrullah Khan and his sidekick Duncan Kabui are wanted, as are the 5 National Bank officials who also recently were sent on leave. Chase Bank is the 3rd bank the Central Bank of Kenya has taken over since Patrick Njoroge became governor last year, July. A 4th bank, National Bank, has sent its CEO and 5 senior managers on leave whilst its accounts are being investigated. The first overarching point to note is that we have now entered a new, more rules-based system of regulation. What is also clear is that we were previously in a more permissive environment. Tier 3 banks are finding themselves at the bleeding edge, of this move. Years of resisting increased capital requirements has meant these Tier 3 banks are pirouetting their businesses on wafer-thin capital. Recent events, Deby, Imperial, National and Chase Bank, now means investors and depositors are placing considerably less credence on the accounts as presented. Then in a double whammy, depositors have embarked on a deposit flight to quality, further undercutting them. Without shareholders now stumping up bucket loads of capital, these banks are in effect now zombie banks. The process of consolidation is now market-led. I appreciate the authorities are keen to keep this orderly and not allow it to turn disorderly. The important point for the authorities is not to provide a blanket put option. That's why it's important to know the proviso to that facility, and to erect a firewall in the right place. The central bank governor has a fiendishly difficult brief. Social media is not responsible for these banks being placed into receivership. When you filter out the noise, social media is proven a preeminent signal and early warning system. In fact, I would argue that recent events confirm the need for real-time surveillance. I recall many years ago the totemic Hansia Grudloff, who was then the chairman of Credit Suisse First Boston, telling me CSFB does not take credit losses, meaning you get caught on the wrong side of a Chase Bank type event and you're fired. I would have thought recent events make a prima facie case for real-time surveillance both at the level of the regulator and at the level of various credit committees. The cutting edge of the financial markets has already moved in this direction. Smart money flew the day after Imperial Bank, I'm afraid to say. There was an interesting story in the Sunday Nation implying that the events as played out were part of an elaborate bear raid by international investors who were looking to upscale their shareholding in Chase Bank. Let me take you back to 2008 when Lehman crashed and Bob Diamond, then CEO of Barclays PLC, paid just about any price to the state of Qatar. This arrangement became the subject of some controversy to keep Barclays out of the clutches of the state rescue. The point I'm making is that the game is lost the moment you're placed in receivership. That's what Bob Diamond understood. Kenya has 42 banks, or 1 bank per million. This is suboptimal. A more optimal outcome is fewer but bigger banks. It is clear now that market forces have the bit between their teeth, that we're now embarked on a market-led consolidation process. Across the economy, we're witnessing a flight to quality. The stock market is placing a premium on companies that they feel are properly governed, DABL, Safaricom, KCB, and so forth, where they know they will not be caught out by an announcement that overnight the entire capital and more has been lent out to insiders. The market is now placing an enormous discount on those companies where they feel governance is challenged. This trend is a lot further to run, in my opinion. Kenya shilling is at a fresh 6-month high, just around 101. Nairobi all shares up 0.55% this year. NSE 20 fell back below 4,000 and is down 1.03% year to date. Kenya is to receive a $600 million loan from China, and this is to be channeled towards bridging the budget deficit for the current fiscal year. Once again, I'm grateful, as always, that you stopped by.